What up, home buying crew? Look at this $225,000 duplex. No, it is not a piece of crap. It is just in a suburb of a suburb, and we're going to break it down, talking about why you want to buy this type of property, whether it's your first home or maybe you haven't owned a home in like 10 years. There's lots of reasons why we get into this. I'm going to cover two of them. The other thing, real quick, if you're someone who's young, the interesting thing, one of my kids turns 23 today, honestly, and I had lunch with him yesterday. He bought a house when he was 20. Asked him, dude, what do you think? You've been in there about 2.5 years. You got a feel for it. How's it going? He's like, I actually am doing a lot better with it now. Sometimes it sucks because you're broke for like a week, sometimes two, depending on what's going on. And that's just real life, no matter what. All generations feel broke, especially when they're young. And I know things are tight right now. I'm living in it. I'm a Gen Xer, 50-year-old crazy mortgage guy, right? All right, so this property, like I said, it's a duplex. Now, one of the advantages of this, it's in Cambridge, Minnesota. This is the example that I'm using. You can take a look at some of the pictures while I talk. It's a suburb of a suburb, essentially an hour away from the Twin Cities. What I kind of rule of thumb with my young buyers, or the other thing I'll talk about, not just buying when you're young, but also multi-generational buying. Those are the two things I'm talking about today. But a suburb of a suburb, that rule of thumb, if you're within half an hour, 45 minutes of like where you work, where you think you're going to work, you're fine. Or if that's not the big driver, maybe you work from home, is parents, family, friends, that type of stuff. Or none of that can matter at all because you're not going to live there for a long time. That's kind of the other thing that goes with this. So as you can see, this one's been redone a little bit. It's in good shape with some of the photos. It's an up and down unit, 2 bedrooms, 1 bathroom up, the same down below. So what you can tell is this was a house. They converted it to a duplex. Not a bad property. So again, this is just the example. So let's get back to the listing and take a look at what this is. It's a $225,000 duplex, right? Let's get into the payment and what that looks like. The first thing I'm going to tell you is, in the example, this is not today's rate. This is not a guarantee to lend. We're using FHA. When you buy using FHA, your down payment, the minimum is 3.5%. So in this example, which is a $225,000 purchase price, your down payment is $7,875, $7,875. I'll talk about where that comes from in a minute. We're using 6.5% as an interest rate, loan term, 30 years. Property taxes on this property, $1,900. Mortgage insurance, it's FHA. Now, homeowners insurance, I'm using $3,000 a year. The reason why I'm doing that is insurance has gone up in Minnesota specifically, and a duplex, you might want to carry some other coverages. That being said, your total payment is $1,780. Now, here's the thing. Lots of times when people are watching these videos or talking to me, they're thinking about just only their income. Well, you can be like my son and buy it only using your income and get a couple buddies to rent from you on top of this duplex situation. But seriously, if it's you and your gal, or a gal and her guy, if you both are making $20 an hour, this is doable. And it's actually doable on your own. I like people to think, if they're buying a duplex, if we have a crappy renter, they stop paying rent, they move out, we have trouble getting a unit rented, can we make this payment by ourselves? Yeah, you can, but it's not enjoyable for very long. So you want to get a renter in there. Now, this being a suburb of a suburb, a little bit farther out, let's say you don't get the ultimate in rent. It's 2 bedroom, 1 bath in Cambridge, Minnesota, but it's nice. Let's just say you get $800. So if your mortgage payment is $1,780 and you're getting, $800 or $900, basically cutting it in half, and you own a house, that's how you make it affordable, especially in today's market. And our thinking, like with my kid, he actually brought up to me yesterday, he's like, all right, I'm about 2.5 years in. So in about 2 more years, he's like, we want to either look at renting this house out and buying the next one, or selling this and buying maybe a 10-year house For him, I live out in the country, he wants to do what his old man does. So he wants to do that. So that is the plan. And in a duplex like this, at $225,000, we have to shift our mentality a little bit. When you're buying that first home, it's not the 80s, the 90s, even the early 2000s where you buy that house and you live in it for the rest of your life. Happens not very often. Most people move 3 to 4, sometimes 5 times in their life. When you're looking at taking down a property, multi-generational buying. I have a lot of people. This is something we used to do way back in the day. I've been doing loans since 1999. Yeah, the 1900s, guys. But this is the kind of crap we did when I actually first started out, is mom and dad buy the house with the kid and their family, and everybody kind of lives together. This happens a lot. In a duplex, that is more of an ideal situation. Because if you think about it, if it's a total payment of like $1,800 and mom and dad live in one side, they're helping with the kids if that's your situation. So you're both splitting that at $900 a piece. No brainer. Remember, guys, every generation starts out broke. Mine did, my parents did, yours did. The difference isn't money, it's understanding the math. Sometimes the first house, it's not the dream house. Sometimes it's a duplex, sometimes it's just the first step. And around here, we got something we like to say. We're doing math today, not opinions. If you like the video, give her a like or subscribe or watch more content, whatever you want to do. I appreciate you checking out this video. We'll see you at the next one.